communities such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Good morning, everyone. Marc Rosenthal with you on this Tuesday. Here's what's happening. Sunshine, blue sky. It'll be nice. Temperatures 58 to 65. It'll be cooler at the coast with the sea breeze. Overnight, partly cloudy and cool. Temperatures by morning about 43. And for tomorrow, increasing clouds. It'll be in the 50s and low 60s. Warmest weather inland. Chance of rain tomorrow night into Thursday midday. Forecast being brought to you by Needham Coin and Jewelry Buyers, located at 317 Chestnut Street in Needham. They're the most highly recommended place to sell your coins, jewelry, gold, silver, and historical items. Call 774-766-3050. That's my forecast. I'm Marc Rosenthal.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer. Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. It's my first day back on the show in a little bit over a week, and I don't know when we'll get next quarter's Disney earnings, but based on my spending there in the most recent quarter, should be pretty good. Just did my hopefully only round trip down to Disney World and back with my 3 children, so they're tired, I'm tired, and we're all a lot broker than we were.
A little pricey, that Disney, huh?
A week and a half ago. So, yeah, back at it and right into the thick of things, because tomorrow after the bell, we're going to be getting earnings to digest from really the major there's few other major companies out there that we'll be hearing from. Alphabet, Microsoft, Amazon, and Meta all reporting after the bell tomorrow. With that, you'll get a combined 10-plus trillion with a T dollars of market capitalization reporting. This comes as we yesterday bounced off of all-time highs again on the S&P 500. For those not paying attention, we're up over 7,100 on the S&P 500, down a little bit today. We'll talk about why. The Fed is entering their 2-day meeting, the last meeting that Jay Powell will likely preside over as chair, given the news last week that I'm sure you guys covered of Tillis removing his final concerns about Warsh being confirmed. And then next week we'll be heading into a jobs report and a whole bunch more. So, yeah, a lot to cover this week, and the earnings continue. As we get into that, Marc, you and I this morning, just internally we're talking a bit about earnings and just the trend that has reshaped things, I guess, really since COVID, since 2020, and the new trend line that we are sitting upon now. Can you talk a little bit about earnings expectations for year over year and what we've experienced long term compared to what we're experiencing most recently?
Yeah, it has been exceptional year over year. So March 30th or 31st of this year relative to last. It's been an exceptional year-over-year period for earnings. FactSet, the
data aggregator software company.
I just call them like a data provider. They expect earnings to increase, and when we say earnings, we mean earnings on the S&P 500.
Yeah.
Currently about $280. That's relative to the index value. That doesn't really mean a lot to most people, myself included. So it's more helpful to think about it in percentage change terms. Year over year, somewhere in the 15% range, which is excellent. The average for calendar year changes is 11%.
Okay.
So.
And we've been on this trend line for a few years now, right? Of exceptionally good earnings. I mean, 2022 would be an exception here, but for the last few years, it has been higher than average earnings beats.
Very much so. If you transported yourself back 5 years and made a reasonable forecast of earnings at that point, earnings today sit about, again, the level now. The earnings today are about 50% more than a simple time trend-based forecast would have suggested right after COVID. So, yeah, earnings growth has been strong, to say the least, past several years.
And so I think, contextualizing something, people, if they're listening to this program or if they watch CNBC or really any, financial news program might hear a lot about valuations being high, among the highest they've ever been and quite exorbitant. And that remains true. Valuations on the S&P 500 are among the highest they've ever been. Only real exceptions to that were the last couple of years, 2021 and pre-dot-com era. But I don't want to contextualize that without acknowledging for a moment that, the earnings themselves have been exceptional. It's resulting in some pretty crazy multiples on presumed future continuation of that just exceptional growth. But you can't ignore, for the time being at least, that those earnings themselves have been exceptional by historical standards and exceptional by really any way you could define them, for beating not only history but the expectations that investors had going into them.
Right. Price to earnings is exactly what it sounds like. It's a ratio. You're dividing price by earnings, and when we say valuations go up, we mean some variation on PE goes up, which means the P is growing faster than the E. So while earnings growth has been spectacular, price growth has been astonishing.
Yeah. I guess my point would be you could get there in a couple different ways. You could get price staying the same while earnings are getting crappy, and we're not going that direction.
You could get to high valuations.
Yeah,
you mean? Yeah.
Never happened, but it's important to consider the context here that the multiples are growing faster than the earnings themselves, but the earnings themselves are also growing a lot faster than history. So anyway, a little bit of context there as we head into, again, important to consider because we are heading into a week where now looking at it, I mean, just with these 5 companies, Apple's reporting, by the way, on Thursday after the bell, Alphabet, Microsoft, Amazon, Meta, right there, those 2 days, but just between those 5 companies, you're talking about some $15-odd trillion worth of market capitalization, probably close to 30% of the overall S&P 500 index. So quite a possibility to move things around there. Taking a shift over to non-S&P 500 companies, OpenAI this morning, they're announcing that they missed their key revenue and user targets in their high-stakes sprint towards an IPO. So contextualizing things here, OpenAI doesn't really at this stage need to disclose much of anything. They're a privately held company. Their whole structure to me is still pretty kind of tough to understand, given that they were founded as a non-for-profit and are now morphing into this for-profit organization that is planning to try and go public this year. But what I think is notable about this is OpenAI, if you're not familiar, created ChatGPT, and I don't think there is any more brand recognizable name in the AI space than ChatGPT. In terms of like a user product, they're more brand recognizable than just about anybody out there, and what they're telling you is not surprising to anybody that uses AI tools, but that their user growth and their revenue targets are falling behind at the same time that they are trying to dramatically raise money to again, spend more and more on data center and compute power build-out.
Yeah, I think they're probably suffering or in danger of suffering the same fate as predecessor tech pioneers. Nobody associates personal computers with IBM or Texas Instruments, or I don't know if you were a home computer user in the early 1980s, Commodore or even Atari, if you remember some of those names. There were lots of them. They're all extinct. OpenAI is synonymous with AI for casual use. We say, I'm going to chat GPT that. But in reality, most of us are now using Gemini or Copilot if we're in a Microsoft application, or something embedded. If you're a coder, maybe you use Claude, or something embedded in whatever application you're using, Mike. So.
Yeah, it does make me wonder, if they are going to go the way of. It's almost reminding me of, Facebook without the revenue and profits. Today you go ask a 19-year-old what social media platform they're on, and most of them are not going to list Facebook up there as the top listing. It might be TikTok, it might be Instagram, it might be a number of others. And, ChatGPT, I won't write it off as dead. It's nowhere near dead. They're still growing at a incredibly fast pace. But the question that I can't seem to get a firm answer on, because I won't claim to be at the forefront of how these models are used and how paid subscribers are using them versus just everyday users, but there doesn't seem to be a whole lot of loyalty to the model. In fact, when I go to conferences and hear about up-and-coming tech platforms and how they are designing things, they're intentionally designing things so that you can pretty easily swap out one model for the other based on what is producing the best results. And so I'm just unsure where the brand loyalty is going to come in, because if I type the same question into ChatGPT, Gemini, Claude, and Copilot, I'm not going to get the same answer, but I am going to get a similarly structured answer to the same question. And the only thing that might keep me in one platform versus the other is that they do get to know me a little bit as time goes on. So we will see if that head start that they got, because it was a pretty substantial head start. I'd have to look at the timeline, but they rolled out at the end of 2020 or beginning of 2022. I don't think anybody else had a real usable model until a good year later, but that head start in today's environment just might not matter. By the way, this news about OpenAI's miss on revenue is bringing down other areas of the market this morning. We've got the NASDAQ off about 0.75%, S&P off 0.5%, just to name a name. NVIDIA, which was up a good 4% yesterday, down about 1 2/3% in early trading today. And the only real news I can see or think of is this announcement from OpenAI and their concerns about their growth or pace of growth. Let's take a quick break. When we come back, a little bit more about the ongoing AI trade, how it's morphing into different areas of the market, and then more on just what markets are doing today, sitting around all-time highs. That's next on the Financial Exchange.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zada from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
There's a column piece in Bloomberg today from a Derry Etherson. Yeah, we're going to go with that. It's an interesting spelling. Quote, I built an AI trading platform in 6 days. That's terrifying. That's the title of the piece here. And it's very reminiscent. Tucker, do you remember that it wasn't even an article in a major publication. It was like a Reddit post that got picked up all over a few months ago by some nobody software guy who wrote about how powerful Claude is and how good it is at building software, which then sent software stocks down, anywhere from 5 to 40% in a few days. Big companies with big profit margins, big user bases, just getting absolutely crushed. I don't remember the author's name, but it was a week of just decimation in the software space, and that trend has only continued. This piece today, again, is just another person who just wrote about, how these tools work and just how significantly easy they are to use. And he kind of buries the lead here, but what he does for a living, he's a computational hydrologist. Anybody know what that is? I didn't. He studies rivers, snowmelt, and glacier mass balance. He has a PhD in Arctic environmental science. He jumped on using one of Claude's models and spent 6 days building a trading platform connecting to 3 different financial exchanges, ingesting news from RSS feeds, web searches, Reddit, Twitter, using large language models to analyze markets, estimate probabilities, and actually like build trading models. So it's more than what I would describe as a trading platform. It seems to be a investment recommendation
that's not a trading platform. A trading platform is like the brokerage you use to make
Schwab,
trades.
Fidelity, Robinhood, etc. He built like a strategy valuation model that also allows you to do what some of those places also do. It also connected to prediction markets like Polymarket and Kalshi, which we will talk about more later. And I think his point is selling one, which is this guy who has a PhD in Arctic environmental sciences built something that can actually, seemingly at least, or according to his claim, allow you to place trades on it and send them to market and build a model that includes a bunch of probabilities in it. The questions that I have are a fewfold on this. One, it confirms a number of things that we've already talked about at length, which is if somebody knows what they're doing, it's seemingly a lot easier to build software today than it was only 6 months ago. A lot easier. The other question that I have, though, is how many of these things are going to crop up over the course of the next few years that are complete and absolute garbage? Like, let's be clear. This guy with the PhD in Arctic environmental science may have built a functioning software platform that allows you to trade. He has no means of testing it or no knowledge whatsoever of the space to be able to see if it does a good job. He has no ability whatsoever to determine if the AI agent that's built into this thing is just going to go off the rails and start roguely trading things all over the place and decimating somebody's portfolio. And there have been stories like that, right? There was a report from a company last year who built an AI agent to do all sorts of processes, and oops, it just deleted an entire database with all of our customer information, and the company's basically out of business because
this is for his own. First of all, this guy, he knows more than most people in finance do about probability and statistics.
Sure.
So he's very well qualified to do it. He probably codes himself. He probably codes in Python or R, which are statistical languages, a little bit different. For example, that's what I use, but I don't claim to be a coder. So he gets it, is what I'm saying, and he gets it way more than your typical MBA does. No disrespect to your typical.
Sure.
Well, I guess I do mean a little bit of disrespect.
Yeah, you do.
Sorry.
Okay.
But, it's just, and they would admit that, by the way, I think. So he's qualified. He's not producing it he's not trying to sell it.
He's not.
He's doing it kind of for his own amusement, and maybe it's the same way some
and to
people
be able to write in a Bloomberg piece.
It's like the person who clips newspaper articles and then watches CNBC and then listens to some company earnings calls.
Right.
This just does that for you.
100% agreed. That is not his intent. But plenty of people want to make money off of this. And maybe it's not in trading, but in all sorts of other tools. I'm just curious, how many tools are going to be out there in a few months that say, hey, this new online site is going to allow you to find the highest yielding savings account by routing everything through our new savings account routing platform and just deposit your money here. And then, oops, we lost all of it. And it's gone now because these things don't exist anymore. Or we're going to file your taxes and it's going to be $5. And it turns out, they built the software right, but they didn't protect any of the data properly, and so it's just
But, Mike, somebody
gone.
could do that now. Somebody could hang out a shingle and be an incompetent idiot.
Agreed. Yeah. The difference is it just became a lot easier to appear legitimate.
I don't know. I mean, if you're not delivering services or goods promised, you could be found guilty of fraud. You could be sued. I just don't. I'm not saying, yes, it's easier.
Yeah.
But does this dramatically change the principle of buyer beware?
No, but I think it makes it more challenging. And we're seeing this in other areas too, right? We're seeing this in areas of fraud, right? 3 years ago, somebody sent me a fraudulent email. They could barely spell properly. The grammar was all screwed up, and they would drive me to a website that was clearly pretty fishy. Today, no, the AI has made it so that they can write a grammatically accurate email, easily make it look like it's actually coming from a major data provider like Microsoft or DocuSign, and drive me to it. And so, yeah, I do think it's just more of the same, but in the same way, it legitimizes a bunch of stuff that today probably you wouldn't go anywhere near because it looks like garbage. So I think, yeah, that's the piece that's interesting to me. I do think there will be major disruptions, and I don't think that the equity markets are necessarily mispricing the risk to those software companies. But I do think there are some areas that might be overblown because of all this. Let's take a quick break. When we come back, Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are pulling back with oil and tech making headlines this morning. The UAE announced it will leave OPEC on May 1st in a major blow to the group. As for the tech sector, the Wall Street Journal reported OpenAI recently missed its own targets for new users and revenue, raising concerns among leaders about funding massive new data center spending. Right now, the Dow is off 39 points, S&P 500 down nearly 0.6%, NASDAQ down over 0.9%, Russell 2000 also down 0.9%, 10-year Treasury yield up 3 basis points at 4.368%, and oil back at $100 a barrel, up 3% today. Oracle taking a hit of 3% on the heels of that OpenAI report, as the software company has a data center deal worth $300 billion. CoreWeave, another OpenAI infrastructure partner, also seeing a loss of 3% on the day. Meanwhile, Spotify tanking 10% after the music and podcast streamer posted a smaller than expected projection for premium subscriber growth, increasing worries that customers may be put off by a recent price increase. Elsewhere, General Motors reported better than expected first quarter profit this morning. GM also raised its full year earnings forecast after the Supreme Court rejected President Trump's emergency tariffs. However, GM stock down by 2%. Coca-Cola beat first quarter earnings and revenue estimates, fueled by higher demand for its beverages. Shares are up by 5%, and after today's closing bell, Visa, Starbucks, and Robinhood will report their results. I'm Tucker Silva, and that is Wall Street Watch.
Well, we are entering the two-day meeting now for the Federal Reserve rate-setting meeting. Starts today, press conference tomorrow at 2:30 p.m.
Yeah.
Always? Yeah, 2:30 p.m. We'll be getting that alongside all of these earnings. So I don't think the Fed meeting will be what drives a whole lot of volatility, but as always, there'll be plenty to discuss. Jay Powell's last meeting, presumably as Fed chair, it seems very likely now that Warsh's nomination goes through and his appointment is confirmed. Given the announcement on, what was it, Tucker Friday mid-morning?
Yeah.
So as we sit here now, Fed funds target rate now.
3.5, right?
Yeah, we're sitting at 3.5 to 3.75 on the target rate from Fed funds, and at this meeting there is currently a 100% probability that it is not moved. By the time, never seen that before. It's always like 99.7.
Theoretically not possible, but okay, fine.
Yep. This is all data according to Chicago Mercantile Exchange. And by the way, when we look forward at December now, there's an 81.4% chance that rates do not move by that point in time. This has shifted quite a bit, obviously, since the oil price shock and the actions in Iran. And I just wonder, Warsh has been silent now for the last, since his nomination was confirmed by President Trump.
Yes, it's been great.
Which has included basically the entire time that we've had actions ongoing in Iran. And so we are getting, opinions from people that were also in contention, and their opinions have changed pretty dramatically. Waller, for example, who was, one of those contending for the job, came out and said, like, hey, while last fall I was pretty on board with the idea of rate cuts, I had some concerns about the labor market. I'm now growing concerned about price shocks and repeating the time period of the 1970s. And nothing I have seen from Warsh makes me believe that he is going to orchestrate that type of pivot too. But you're seeing it from some of those who were very public about, pounding the desk for rate cuts last year, who are now turning around and saying, yeah, never mind. And we will have to see what we get from Kevin Warsh, who, by the way, historically, prior to this administration for Trump and the prior administration for Trump, was all about, hey, rates need to be higher longer. We have massive debt problems. We have potential for higher inflation. He was wrong about it post-GFC and was pounding the desk for higher rates then. He was loud about it during the Biden administration. And I'll be very interested to see, when you're actually in power and not running for the position, what your position is on rate cuts.
What's vital is that the Fed maintain credibility, and it's probably already lost it because Trump has compromised the Fed. You could say you think that's great. You want Trump to control the money supply, which is the main determinant of inflation in the medium to long term.
Yep.
Or you could say you think it's horrible. I obviously think it's horrible. Nothing against the president. Any politician should stay as far away from monetary policy day to day. Obviously, they've got to oversee it.
Sure.
But should stay as far away from it as possible for obvious reasons. Well, maybe they're not obvious. Politicians will always want lower rates. Warsh said that in his testimony, and he's right. Unfortunately, he's tainted. He's got to earn credibility. Mm-hmm. He's got to earn back the credibility that Volcker earned, that Greenspan earned, that Bernanke didn't squander. So It took the Fed 50 years, the mistakes of the 1970s when it thought it could exploit a trade-off between unemployment and inflation favorably. It couldn't. I'm oversimplifying a little bit, but that's sort of the consensus. Right up until COVID, when Powell and the other members of the FOMC were late to act, Mike. It took decades for the Fed to establish itself as having the credibility to squash inflation when the circumstances called for it, to impose economic sacrifice. Volcker earned that credibility. Warsh needs to earn it back because Trump has compromise the independence of the Fed.
Let's talk about that credibility for a moment and why it's so important, because I don't think it's necessarily obvious, right? Like in the 1970s, for example, when they were trying to fight back that credibility, they were not public. The Fed was not public about what they were doing. They were just saying, hey, set rates. They'll learn, people will learn about it later.
There was no press conference. But
there was no press conference in that way. That has been.
But they were vocal, though. I mean, they said, we don't think in the 70s, the prevailing view was inflation was non-monetary in cause. Burns, chairman at the time, said there's not much monetary policy can do about it. We need price controls. We need incomes policies. They were obviously mistaken.
So that credibility piece, let's just explain or think through logically how you would behave if you didn't believe the Fed was going to cut inflation.
If you want your kids to do what you want them to do and a threat to punish them is credible, the punishment is either you don't have to invoke it, or it's less severe. If the Fed is credible, if you believe they're going to want to squash inflation and they're willing to impose economic hardship on the country to do it, Mike, the adjustment is quicker.
Why?
Because people's expectations change. That is the why is the key question. What's the mechanism there? Is it magic? No, it's expectations. Expectations can cause prices to change quickly and bring it up or down and cause inflation to go down.
If I am a business and the Fed is telling me, hey, they are going to hike rates and slow the economy down.
You believe it.
You believe it.
You're going to reduce your rate of price growth. If you don't believe it, you're going to keep increasing prices at the same rate you were.
You're going to keep hiring people. You're going to keep giving raises.
You don't want to keep raising prices to keep up with what you think is the growth in the money supply. But if you think, and I keep saying the money supply, you can substitute short-term interest rates, the Fed funds rate for that, because that's their policy tool now. But if you believe that the Fed, because Volcker was perceived as credible, He said, we're going to get this inflation under control. Monetary policy can do it. And there was a famous paper written by a guy named Tom Sargent, and he's sort of associated with this school of thought. Monetary, the sacrifice required to reduce inflation is mitigated by credible policy because people's expectations adjust. The problem for the Fed right now, in addition to facing the biggest shock, and when we say shock, we just don't mean like we're shocked or it's dramatic.
No, you have
That's
a tariff
very
shock
specific,
followed by an oil price shock.
A shock specifically means when headline inflation jumps and, say, underlying inflation doesn't, at least not initially. That's generally called a supply shock. It could be oil, it could be food, and we're going to get a food supply shock, by the way, on top of the oil price shock that we're living with. And there will be other shocks, knock-on effects from the oil price shock, from the situation in the Gulf. So the Fed is faced with a possible series of adverse shocks, adverse in the sense that they're going to push prices up and push demand down, stagflationary, at the worst time in the modern era because its credibility has been called into question because the president has unfortunately gotten maybe bad advice or just decided to compromise it.
The question of credibility, I think, is perfectly defined by Waller's own quote here. He's talking about the 2% inflation target, which is the Fed's stated objective when it comes to inflation. And he says, quote, "We keep saying 2. We're 5 years in and it has never gotten back to 2. At what point do people start doubting your promises?" And so, to me, that's a perfect summary of why he and others are concerned about the credibility of the Fed.
I'm glad he rediscovered his manhood recently. I'm glad, because we were a little concerned. It was touch and go there while he was angling for the job. Forgive me, but that's what it seemed like. He used to head the econ department at Notre Dame. He is an accomplished researcher. He's one of the pioneers in modern monetary theory. So Waller gets. I'm not like. I don't mean to sound overly obsequious, but the guy gets it, and he's right. He knows that's the main issue, and he understands that real Fed funds might be 3.5, but as inflation expectations creep up, and they've jumped, Mike. Real Fed funds is coming down. Monetary policy is getting easier without the Fed doing a thing.
Let's take a quick break. When we come back, with oil prices topping again $100 a barrel, maybe just creep down to $99.97. Good news. We're going to talk a little bit more about Iran and the auto market next on the Financial Exchange.
The Financial Exchange streams live on X. Stay on top of the markets and get live reaction as it happens. This is the Financial Exchange.
Hi, this is Susan Powers from the Armstrong Advisory Group. When it comes to Social Security and Medicare, the decisions you make today can have a lasting impact on your retirement. There are key choices to consider, like when to claim, how spousal and survivor options work, and whether your Medicare coverage is aligned with your needs. And without a clear strategy, it's easy to overlook how taxes, income, and healthcare costs all connect. So join us for a complimentary educational seminar on Thursday, April 30th at 5 p.m. at the Crowne Plaza in Woburn. We'll help you understand your options and the decisions that come with them. That's Thursday, April 30th at 5 p.m. at the Crowne Plaza in Woburn. Reserve your seat today by calling 800-393-4001. That's 800-393-4001 or register online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Mark, as we sit here with gas prices at $4.18 a gallon at the national average, with, I always like to laugh at California. California sitting at $5.97, so they're just happy to be under $6 a gallon again. But at the same time, GM boosting their profit outlook as truck sales buck the rising gas prices. Yeah, for the time being, at least, people are not reacting to high gas prices, which I do find interesting because I distinctly remember during the 2007 period when gas prices spiked, and maybe this was also due to some recession concerns, I'm not sure, but I distinctly remember like Prius and every hybrid sales out there just absolutely taking off at that point in time, and people were selling their 2-year-old Priuses for above new Prius MSRP because people were so intent on getting those non-gas guzzling, right, those fuel-efficient vehicles. Maybe this is just an expectations piece here. Go ahead, Mark.
Well, Michael, this is going to be helpful for the audience, but when you think about how long it takes behavior to change, look at this chart of the gas price. And for those of you who can't see it, picture a line going more or less straight up for 5 years.
Ooh.
Commodity prices rose from the early stages of the recovery. I'm being U.S.-centric here. But in 2003, the economy started to go like gangbusters.
Yep.
Thank you.
Yep.
In 2003, the economy started to go like gangbusters again. We were mission accomplished in Iraq in the first third of that year. Obviously, there was more to play out there. But my point is,
kidding.
Gas and another 20 years or so worth. But gas prices, I'll stay on track here. Gas prices went up for like 4 or 5 years straight.
So maybe that's it.
With a few interruptions. So people were wondering, now that we didn't know the GFC, we didn't know the Great Recession was coming,
Sure,
and that would send oil plummeting, but people were wondering, there were books being written, Twilight in the Desert, the end of the thesis, forget it.
Peak oil, all that stuff.
Peak oil,
was being
thank you.
talked
That's a
about.
better way to put it. Peak oil, thank you.
Yeah, this does seem...
Peak oil means, oh God, we could be paying $10 a gallon.
Yeah. Yeah, this does seem very momentary.
We just don't know yet. It makes
we've
perfect
seen.
sense that people aren't yet making big changes.
The other
They
piece
will if it
on
lasts.
cars that we haven't been paying much attention to is the USMCA, which is under threat. Foreign car makers basically threatening to pull all of their cheapest models from the United States without a trade deal in place. Honda, Toyota, Nissan, Hyundai, all basically telling the administration, hey, if we do not get a new deal, we can't sell these cars in the United States without massive tariffs on them, and these cheaper models will come under threat. To which I say, yeah, that is pretty much the entire purpose of tariffs. Like, I want to be really clear that this is not an accident, right? Like, the reason that these car companies are saying this is because the tariffs are real, they are significant, and if they exist, then they will need to move massive supply chains into the United States, which is just not doable in the short term. And so their answer is, okay, we'll just sell these cars somewhere else where they are more affordable due to tariffs in the short term. In the long term, yeah, maybe it incentivizes them to actually bring those supply chains into the U.S., but I don't think those companies are willing to make that bet on a policy that Congress hasn't authorized and the next president could just wipe out.
I'm trying to think of what aspect of policy right now at the federal level is not stagflationary. We're taking supply out of the low end of the auto market through tariffs. As you said, it's deliberate.
Sure.
Foreign policy, the conflict in Iran is stagflationary. You could say you think it's great. You want Iran wiped off the face of the earth or something. But unavoidably, it's stagflationary. It's going to slow growth and increase prices.
AI. It's the only one that I can look at. It's not exactly a policy.
Yeah, right. No, you're right. But we'll give policy. Yeah, but policymakers are encouraging it.
Sure.
Like we're telling the states, hands off AI.
Yep.
Let's let them build a data center in your backyard if they want to. This is good for growth or yada yada.
When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate, and it may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trust can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. Once again, the phone number, 866-848-5699, or you can request it online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
By the way, I wanted to point out so I don't get called out. The Honda Civic, Toyota Corolla, many of these cars are manufactured in the United States today. The problem is that the parts that go into them, significant portions of them are not manufactured in the US. And those are the pieces that are compounding the price on these, lower end vehicles where, apparently they had the supply chain worked out pretty well. So it's not that these things are all manufactured in Mexico and then shipped over. No, they're put together in the US, which again is problematic because those are American jobs. I suspect that there is going to be more action on auto tariffs because there already have been from the administration that have pivoted things away.
Yeah, North American car manufacturing by foreign-owned companies doesn't work without North American free trade.
Right.
Because stuff goes back and right over the border, Canada to Michigan, Canada to Michigan, Mexico to wherever, Alabama, and back and forth. And yeah, it doesn't work.
As we close in on the 11 o'clock hour, markets largely in positive territory being dragged down by the NASDAQ. We're going to take a quick break. When we come back, full market update and a lot more here from the Financial Exchange.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zada from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, How to Leave Assets to Your Beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning, happy Tuesday, and welcome back to the Financial Exchange. It is Mike, Marc, and Tucker with you on a Tuesday where we have the NASDAQ off about 300 points, down 1.2%, the S&P off 45 points or 2/3%. Dow actually holding on to some positive gains for the day, up about 0.1% after touching all-time highs, I believe, on the S&P and NASDAQ just yesterday, with a bit of a surge there, relatively flat, but getting just above those all-time highs again. We've got a Federal Reserve meeting ongoing, so taking a look at more interest rates around there. Yield on the 10-year Treasury sitting at 4.358%. We've got the 30-year fixed-rate mortgage today, according to Mortgage News Daily, sitting at 6 1/3%. And when we take a look at expectations for Fed action for the rest of the year, first things first, one thing that really pretty rarely happens, Chicago Mercantile Exchange is pricing in 100% probability of no action by the Federal Reserve today. By the end of this year, still investors mainly pricing in no likelihood of rate cuts, as it's 81.5% probability that interest rates are exactly where they are now. Kevin Warsh on Friday cleared a key hurdle with Senator Tom Tillis removing his threat to vote against his confirmation from the Senate Finance Committee. Senate Finance Committee. So that looks like that is going to move forward. Still no announcement quite yet from Powell as to his intentions. He will not be able to serve as Fed president, of course, if Warsh is confirmed, but he could remain in his seat on the Federal Reserve Board of Governors. Very unlikely, in my view, based on all of this, but is a possibility at least out there. Fuel prices moving higher today. Oil prices up. They touched over $100 a barrel, currently sitting at $99.72 on the West Texas crude benchmark, up 3.5% today on the continued tensions and reports that President Trump isn't happy with the Iran proposed deal to reopen the Strait of Hormuz of the plan. That's bringing gas prices up as well, up to about $4.18 a gallon on the national average, according to AAA. Anything else market-wise catching your eye this morning, Mark?
No, nice summary.
In terms of other data that we're going to be getting out there, obviously, we have the Fed meeting, which is going to dominate the news tomorrow afternoon, their press conference at 2:30 p.m. We have some housing information coming out early tomorrow, housing starts, building permits coming out tomorrow morning at 8:30 a.m. Initial jobless claims that we always get, as well as the GDP revisions and the personal consumption expenditures index. This is the Fed's preferred measure of inflation. We got CPI a couple weeks ago. We'll get PCE for March. All anticipating a pretty big bump up in inflation given the gas prices that I just mentioned. Some manufacturing data on Friday, but the big potential market moving stuff is all on the earnings calendar front, where we have some key companies reporting over the course of the next 2 days. We do have Visa after the bell today. Coca-Cola already reported, but the big heavy hitters, you've got the $4.2 trillion market cap Alphabet reporting tomorrow after the bell. Microsoft's $3.2 trillion of market cap reporting after the bell. Amazon at $2.8 trillion. Meta at $1.7. All reporting tomorrow. That's Wednesday after the bell. And following that, you'll have Apple, about a $4 trillion company, reporting Thursday after the bell. So plenty of information there to potentially drive future AI spending from the likes of, pretty much all of them other than Apple at this point. And plenty of them to also tell you, hey, how is our current spend paying off, as Meta has significantly pivoted away from the metaverse and into AI, which kind of begs the question if they're going to rename themselves for a second time. And then obviously Google is both spending on the data center build out as well as testing their own models and getting some traction with their Gemini product. So quite a bit to learn over the course of the next few days. Not that they're going to answer all of those questions, but certainly that's what they're going to get questions about, is how do we as investors determine whether your massive increase in capital expenditure is paying off in any meaningful way.
Yeah, that's the big question. Will these investments result in future profits? That sounds stupidly simple. Why would you even have to articulate it? But it is the question.
Sure.
We know past profits have been, and current are spectacular, but the massive investments, to an extent a gamble, that they're making today, the prospects for those are Uncertain, and that's probably an understatement, Mike.
Yeah, we covered this last quarter, but Amazon, Alphabet, Meta, and Microsoft alone in 2026 are projected to spend between $600 and $700 billion with a B dollars on capital expenditures, primarily on AI infrastructure, most of that being spent here in the United States. So that's going to be the other question that's asked. Hey, are you still on target to spend that? Can you actually spend that? Can you get the infrastructure that you want up and running? Is that $600 billion price tag even realistic now, with costs moving up, states restricting data center build out, et cetera, et cetera? So big questions to be answered from those major tech players, and many of those questions being asked tomorrow after the bell. In the meantime, we have a piece in Bloomberg from Allison Schrager, titled, AI may be the U.S. economy's only hope, Obi-Wan Kenobi. What exactly is her argument here about AI, coming to save the day here? Because it read to me as a little bit drawn out. She talks about the aging population, our overwhelming amounts of debt, and how all of those things are likely to sink the economy unless AI saves us.
Well, we need growth to come from somewhere, and she sees AI as the obvious, like everybody does, I guess, as the obvious savior. Like you said, we need a savior. Productivity growth, until very recently, slowed down a lot. 2010s, it was kind of languid, kind of stagnant. And productivity growth is important. Doing more with the same amount of time or stuff. You could think of that as the definition of productivity.
Sure.
Output per hour. As output goes up and the hours stay the same, that means we're getting better at doing stuff with the same amount of resources. And wages closely track productivity growth.
Yep.
So
my biggest problem with this argument she's right that a productivity boost would dramatically help the U.S. economy.
Of course. So would a big increase in the labor force.
Yeah. I guess my problem is whenever we talk about the overwhelming debt or the aging population, we seem to do so as though it's this looming crisis that's happening any day now, when this has been a crisis that we've been dealing with for the course of the last quarter century, and people have been writing about it the same way.
And by the way, Mike, it's a slow crisis, but growth went from 3% in the last century to 2% this century.
Yeah, it is a crisis. I don't mean to dismiss it as...
go ahead, sorry.
I don't mean to dismiss it as not problematic, but to be clear, if we are in crisis, then we're in good company.
It's a crisis in the sense that we've got these big unfunded liabilities, Social Security, Medicare, and the revenue's got to come from somewhere, and it's easier to raise revenue if the economy's growing faster.
Yeah.
It's not a crisis in the sense that, well, we're just going to have to make sacrifices. It's not like we're not all going to get up, go to work, eat, maybe even eat well, go on vacation, have happy lives. And we just won't know I don't know what the alternative universe of 3% growth for the last quarter century would have been like. We'd all be on average
a little worse off.
Excuse me.
Significantly worse off, actually.
Yeah, well, I'm sorry. We'd all be on average, 50% richer, close to that.
Oh, sorry. If
growth,
it had been higher.
But you're saying the same thing. You're just looking at the opposite side of the coin. But Mike, we don't know what that. We can't peer into that universe and say, oh my God, look at me. I've got a great head of hair and I'm taller because I had leg extensions and I have so much money. I have 3 homes and
several trips to Turkey.
Yeah, that's your thing.
Well, for leg extensions.
Is that where?
That's where they get done.
Wherever Stallone got them is where I'm going to get them.
Yeah, I guess I look at the Japanese economy, for instance, that is kind of in this scenario, in a worse one than we are. I can't look at their society and say, "Wow, it's crumbled and fallen."
No, they're still wealthy. The level is still high. The growth rate is slow.
But their economy's been crap. Yeah.
Well, I'm sorry. Yes, you could say crap if you look at just the growth rate. But they're still very, very rich, and the level of per capita GDP is very high. It just slowed down a lot after 1990. It had to slow down, Mike. It wasn't going to. They were bombed into oblivion after World War II. They grew at they didn't have a recession for 40 years after that,
right?
Because they were catching up. It almost had to slow once they caught up to their own so-called steady state. No need to define it. The intuition is enough, I think. Once they got to their own sort of steady state, they sort of plateaued there.
Right.
I've not been, but they live well. They're a very sophisticated Western country.
And if we're going to talk about the need for productivity to take off in the United States, you better hope if you're in China that productivity takes off there because the demographic issues that they face in their country are far more severe
you're right.
than
These
the ones we
problems are
face in the
kinda
United States.
they're global.
They are global problems, and I think that piece doesn't solve the problem, but it is overlooked quite a bit. That most developed countries are in the same problem or a worse one when you look at either the combination, either demographics on their own, debt on their own, or the combination of the two.
Yeah. Go ahead. We got a break here.
Let's take a quick break. When we come back, a little bit of trivia is coming up next on the Financial Exchange.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zada from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Time for trivia here on the Financial Exchange, and on this day in 1937, Pan Am operated the first scheduled commercial trans-Pacific flight. From the 50s through the 70s, Pan Am was the jewel of the sky, bringing luxury and innovation to air travel. Unfortunately for Pan Am, hard times plagued the airline until it was forced to declare bankruptcy. So our trivia question today: what year did Pan Am cease operations? Once again, what year did Pan Am cease operations? Be the fifth person to text us at 617-362-1385 with the correct answer, along with keyword trivia, and win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules, at financialexchangeshow.com.
Gallup does an annual poll that I was not previously really aware of. They've been doing it for over 20 years on the state of Americans' finances, and unsurprisingly, affordability continues to dominate Americans' financial concerns and worries. 31% cited affordability in an open-ended question. That's below the peak back in 2024 when 41% of people cited it as a top concern in that open-ended question. But unsurprising data here, and falls in line with other survey-related information we've been getting from University of Michigan Consumer Sentiment and others. I think what's different about this one is when you look at the data from Gallup, it brings you back to a level that we were seeing in the early to mid-2010s in terms of Americans' views on the economy, and compare that to University of Michigan when, the sentiment that you're getting from there is worse than at times in the 2008 crisis and other periods of time. This one actually lines up with, I think, where you can find some hard data points too, right? When we look at the unemployment rate, when we look at the pace of job creation, all of those things are lining up with a 2013 to 2016 timeframe, and as are the responses to this survey, which I just found more interesting and informative than what we've been getting from other sentiment surveys recently, Mark.
Look, Mike, the reality is cost of living has gone up by 28% on average. That's using the CPI. That's since January of 2020. So that's just the overall change.
Yeah.
We're used to hearing about the inflation rate. If you annualize inflation for this decade, you get 3.6. I'm rounding up just a few hundredths of a percentage point.
This is for the 2020s decade?
Our current decade.
Okay.
Compare that to the last decade, 1.5, to the 2000s, which nobody associates with economic health and stability. And the first half of the 2000s was quite inflationary. We talked about gas prices earlier and oil prices earlier and how that changed consumer habits. The rate of inflation, again, I'm annualizing it here, 2.14%. In 1990s, 2.3%, rounding up.
Yeah.
So it's shocking how much, 2% doubles every, 30, I should know this, 34, 35 years.
Yeah.
3% is like
36,
every 22, 20, 36, thank you.
Yeah.
Yeah, I could have just, thank you. Hey, Tucker, up yours. So prices are going to double a lot faster.
24
Well, you have to
years.
take, if you're a mathy guy, you could use the rule of 72,
Yeah,
or
I'm
you
lazy.
could use logarithms if you want to solve that equation. All right, anyway, point is we cover all the bases here. So prices are going to double faster. Your dollars go less far. That is a reality. And, some categories have gone up a lot faster than inflation. Shelter prices are up 32% cumulatively in the last 5 years.
Education, massive.
Yeah, I didn't pull that, but it would have to be as much as
Yeah.
shelter, maybe a little bit more, because education inflation is like mid-high single digits.
I look at the experience that, you brought up the 2010s, and I'm looking at another number here, which is real median household income. So real just means inflation adjusted.
Yeah.
And it's not average, so you're not being dramatically swayed by that top 1% that has obviously gotten a lot wealthier over the course of the last 15 years. But in 2010, the real median household income was $68,000. And people weren't terribly happy because back in 2007, it was $73,000. So, real household incomes had dropped during that point in time. But Then you got to 2019. Inflation remained relatively low. Wages increased over that time. And you got from, again, real median household income in 2010 of $68,000. By 2019, you were sitting at $83,000. I think the problem that Americans are experiencing is not that incomes haven't really kept pace with inflation. They have. Real median income today is higher than it's really ever been. It's sitting at $84,000. But that's right where it was in 2019.
Yeah, it's a good way to put it.
You just haven't gotten ahead over the course of the last 7 years. And if you've been trying to buy a home or if you've been trying to send yourself to college, then you might have fallen behind. And so that's been the experience that I think people are realizing, which is honestly similar to the one back during the Great Recession where, pre-Great Financial Crisis, it took me as a household a good 8 years to get back to the average or the median real household income that I was experiencing back then.
So can I ask a philosophical question here, or did you want to?
Sure, but you only got 45 seconds to do it, so hurry up.
Is this the new normal, or is something broken? Because it could just be it could be structural.
You mean the way that people respond to surveys?
The way the economy is growing, the inflation in fits and starts, geopolitical instability, protectionism. I mean, Mike, this could be the secular, if you like, just a fancy word for sort of affects everything and is long term and will be with us for a while. This could just be the new normal. What we've experienced so far this century, because it is.
I don't see, for instance, a lot of politicians really pushing for a globalization again. So to that end,
that's sort of what I mean.
Deglobalization,
which by the way is inflationary and a slower growth. You could say I like it. I don't want any foreign goods or foreign people or whatever. It means slower growth and higher inflation. Full stop.
Yeah.
Good. Sorry.
Yeah. So I mean, could you convince me that for some period of time we are on a deglobalization trend? Well, I don't see any political party directly contradicting that here in the United States. Democrats seem to want it. Republicans seem to want it. And granted, it's the far extremes on both sides of that party that really push for it, but that is the purveying message from both ends of the party. Quick break. When we come back, full market update is next with Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member can help to keep their finances in order?
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life, and how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it, because I might not have the same accounts that I used to?
Right, and the guy does lay that out of, hey, how do I document changes in here, because you might not always have that old account at said financial institution. It could change, it could shift, you might retire, and keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes, and so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number, again, is 800-393-4001, or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
The markets are pulling back with oil and tech in the news as the UAE announced this morning it will leave OPEC on May 1st in a major blow to the group. As for tech, the Wall Street Journal reported OpenAI recently missed its own targets for new users and revenue. However, last hour, OpenAI has pushed back on those concerns. Right now, the Dow is up nearly 0.2%, 81 points higher. S&P 500 down about 0.75%. Tech-heavy NASDAQ selling off 1.4%. Russell 2000 down over 1%. 10-year Treasury yield is up 2 basis points at 4.358%. And oil jumping 3% higher, trading right below $100 a barrel. Oracle taking a hit of 4% on the heels of that OpenAI report as the software company has a data center deal worth $300 billion. Meanwhile, Spotify shares tanking 12% after the music and podcast streamer posted a smaller than expected projection for premium subscriber growth, increasing worries that customers may be put off by a recent price increase. Elsewhere, General Motors reported better than expected first quarter profit. GM also raised its full-year earnings forecast after the Supreme Court rejected President Trump's emergency tariffs. The stock is down by 2%. And after today's closing bell, Visa, Starbucks, and Robinhood will all report their first quarter results. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, what year did Pan Am cease operations? That would be 1991. And Marc from Shrewsbury, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Marc, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Companies in the state of California received 85% of all U.S. venture capital investment in the first quarter of this year. If you think that that is just a one-off, those same companies, companies based in California received 60% of U.S. VC money for all of calendar year 2025, according to PitchBook Venture Monitor. This is not a one-off, seemingly. It is, defined by this moment in tech infatuation, AI infatuation. And Justin Fox from Bloomberg asks if it's a kind of an indication for where the rest of the country might go, because as he points out, employment hasn't exactly followed suit on all of this stuff. He focused specifically on tech employment in California versus the rest of the United States, and points out that, interestingly, since August of 2022, which lines up fairly well with when ChatGPT was rolled out, tech employment in the state of California pretty significantly down on percentage terms compared to the same employment in the rest of the United States, which has grown. And out of curiosity, I pulled the same data for the unemployment rate. So forget about tech employment. Let's just look at overall unemployment. In August of 2022, California was sitting at 3.8. Today, most recent data is only as of February, but we were sitting at 5.4% unemployment at that point in time. Now, overall unemployment has risen across the country, but the U.S. on average went from 3.6 to 4.3 during that period of time. So I think it's reasonable to say that unemployment in California has grown at a faster pace than the rest of the country. But boy, are there a whole lot of other things that it could be other than AI creating job losses.
Oh, sure. It's way too soon to say. None of this is new, much like Route 128 here in the Metro West area of Boston, where we live and broadcast from. There are cost savings, productivity gains that firms in any industry, but tech is a really conspicuous example because of Silicon Valley, that firms gain by clustering together. So California is, I'm saying what everybody already knows, but that doesn't, I wouldn't necessarily expect, most VC investment, venture capitalist, a form of private equity investment, as I would guess, I don't think it's a risky guess, has gone to firms in Southern California over the past 50 years, with a little bit here, a little bit in New York, and then a couple of other little hubs.
Yeah, I think, to your point, it is too early to tell. There are other forces at work here, too. There are massive tariffs. There is trade with China that primarily gets diverted through California that has been disrupted for the last several years. There are all sorts of policy decisions that are being made in California that could be changing the overall tech landscape there. So an interesting piece, and I do find it interesting that, unemployment has seemingly diverged from the national average in the state of California in ways that other states haven't. But there are a number of different contributing factors that could be the cause.
Plus, some of this VC, this venture capital money could be early stage. It's not going to go into financing a 100-person workforce right away.
True.
Necessarily. We don't know what if it was late stage VC and you weren't seeing jobs created, maybe that's a little bit of a paradox. Maybe not, though, given that the whole point is to increase productivity, doing more with the same number or even fewer people. So.
Folks, want to make you aware of our seminar that's coming up in just 2 days. You've probably already heard about it, but there is still a little bit of space left to register. It's this Thursday, April 30th, 5 p.m. in Woburn. It's at the Crown Plaza in Woburn. We're going to be joined by Susan Powers, Effie Vasulis. We're talking about Social Security and Medicare and a lot of the ins and outs that we just don't have the ability to get into the weeds on this program. And so if you are staring down Social Security and Medicare age, if you have questions, we chose these subjects because they are easily the most common questions that we get from pre-retirees about how these programs work and how it's going to benefit them, what the costs are going to be, what their options look like, and how to maximize the benefits that they are entitled to. Again, easily the most common questions that we get. We've got this all planned out for you to educate you on how these programs work and how to take advantage of them. Again, it's at 5 p.m. on Thursday, April 30th. It is free to attend. It's at the Crown Plaza in Woburn. You must register before the deadline, though. You can go to armstrongadvisory.com/events. Space is limited. You need to register online or give us a call. Again, armstrongadvisory.com/events, or call us at 800-393-4001 to reserve your spot today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Well, there was something that we all kind of sensed and knew, and Chuck's been making a big point of this on prediction markets and just how badly the average person is faring. But somebody actually went out and measured it, because on Polymarket, they actually have a way of doing so. They anonymize all the accounts and actually tell you how much people are winning or losing. And over 100,000 accounts lost at least $1,000 on Polymarket, according to Bloomberg News analysis of every wallet active since the beginning of 2025. That number, by the way, is almost twice the number of that made at least $1,000. So,
interesting.
50,000 accounts made at least $1,000. Over 100,000 accounts lost over $1,000. The vast majority were obviously somewhere in between. But I think speaks to, for instance, what would be your expectation if you measured the same thing at Fidelity, Schwab, Robinhood, and E-Trade?
What do you mean, for stock traders?
Yeah.
Oh, totally different, because for every...
Vast majority would have made money.
For every active bet in the stock market, say against the S&P 5, against the weights in the... So suppose you think Apple is overvalued.
Sure.
I don't want to pick on Apple. I don't necessarily think that, but I don't have an opinion. But suppose, just to use a sort of concrete example, you could bet against Apple by weighting it less than the roughly 7%. Is that about right?
Sure.
That it...
Something in there, yeah.
Yeah, just call it...
Of the overall S&P 500.
I'm going to call it 7. So if you thought Apple was overvalued, you might own 0% in your portfolio. Someone else has to overweight that for you to underweight it. There are always winners and losers on every side of an active trade. It's very different. You have to sort of recalibrate when you're thinking about prediction markets. The expectation beforehand isn't the same as it is in the so-called in the stock market game, so to speak.
A professor at the University of Toronto's Business School recently co-authored a paper that found since 2022, around 69% of traders on Polymarket lost money, while the top 1% captured 3/4 of the profits. And so my hope here is that those people betting on places like Polymarket or on sports books, which are differently operated, differently regulated, begin to come to the realization that this operates much more like a casino than it does an investing platform. At least the results seem to resemble that a lot more, because where I get concerned is that from a user experience standpoint, it feels a lot more like a brokerage platform than it does a casino. But from a results standpoint, it acts a lot more like a casino than it does a brokerage platform.
I assume they did that deliberately to give it respectability. What I said earlier, by the way, I know you can't dump it now, Tucker. It's been like 2 minutes, but I don't think that was quite the right analogy. So just forget it if you were even paying attention. But yeah, I think they do that to give it a veneer of like legitimacy.
Of course.
But it's actually,
and I think it's successful.
It's actually just a total circus.
It's gambling. It's gambling, and I think the problem that we have talked about at length is when you're 18 years old or 20 years old or of a young age, you tend to do some stupid things. In previous decades, to do that stupid gambling thing, I'd have to drive down to Connecticut and, take my dollars out of the ATM, convert them into chips, and then go gamble them away. And today, it's a heck of a lot easier to do by linking my bank account to a betting platform.
Look at any sporting event on TV. You're induced to bet on just about. I mean, you can't avoid it. You feel assaulted by the pressure to gamble when you're watching the NBA on Prime or whatever. It almost feels
like
sleazy.
The mid-game promotions of like, hey, this guy could hit a home run.
Give me a break,
right?
right?
These are the odds. And you're watching the game, and it's the third inning or whatever.
Yeah.
I'm just trying to enjoy an all-American pastime here.
Yeah, you're bombarded with this.
Stop trying to get me to become a gambling
If I
addict
want to place
and
a
ruin
bet,
my life.
I'll know what to do.
To be clear, the new American pastime is gambling on sports.
Oh.
That's the problem. Let's take a quick break. When we come back, a little bit of Stack Roulette is next.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zada from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange.
The Financial Exchange streams live every day on YouTube. Subscribe to our YouTube page and follow market activity all morning long, only here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
Time for a bit of Stack Roulette. What do you have for us this morning, Mark?
Did you guys hear that the UAE is leaving OPEC, the United Arab Emirates? They're not its biggest oil producer as a group. OPEC, which had about a dozen members, now I guess they're down to 11 after this. They produce about 31 million barrels a day. We here in the U.S. produce about 20 for comparison. So UAE is not big. They do 3 to 4 million barrels a day, but they're doing it so they can say, for example, so they don't have to curtail supply when the Saudis put pressure on the rest of the cartel to do that. So maybe in the long term, this is a positive for oil output.
Yeah, I would like to
I'm
see
just looking for
smaller
like glimmers
cartel
of hope here, Mike.
on oil markets.
Yeah, I mean, not much to cheer lately.
Yeah, it's great. They're leaving OPEC and still can't get their oil out of the Middle East based on what's going on today.
Fair point.
Produce as much as you want. New York Times has a piece. These couples wanted to have children. Rising costs are stopping them. And got to be honest, I read the piece. I don't think it's costs. So I'm going to read a little bit of this. Mr. Goodwin, 25, works as a firefighter. Miss Stewart, also 25, nail technician. Adding a child would push them into living paycheck to paycheck, they said. Mrs. Stewart said she would need to take on extra shifts. Mr. Goodwin would have to give up hobbies he enjoys, like golfing. Yeah, that's what having kids does. You don't get to explore your hobbies as much when you have screaming 3-month-olds around the house.
You can do 9 holes. Come on.
When was the last time you escaped to do... How many times would you say a year, Tucker, you escaped to do 9 holes since having kids compared to prior to having kids?
In the summer, I do 9 holes once a week in a league. But 18 holes... Geez, maybe twice a summer.
Yeah, compared to pre-kids, quite a bit more frequently would be my guess.
Sure.
Guys, that is part of the deal. When you have children, you give up some of your other hobbies that you were passionate about because you wanted to have children. I'm not saying that a firefighter and a nail technician are going to have an easy financial life, but at 25 years old, it just read to me that they weren't quite prepared to have children and decided not to do so.
I should say try to play 9 holes a week. And if like everything's not well at home, like the kids are just, crazy
Angry.
or something or tired and my wife needs help, then guess what? I'm staying home.
So do they get into particulars, Mike? Like how constrained are they? Did they put a number on it?
No, they just said that, in the event that they had a kid, they assumed that they would need to pick up additional shifts, drop some of their hobbies, and one of them might need to stay at home to raise the child because their job didn't pull enough income to just...
Okay. I mean, you can quantify this. There's a lot of maybes and mights. And okay, so we could do it by the time we're 28 if the public employee gets a couple of promotions. I mean, it's a good job.
By the way, though, I don't want to diminish the costs of raising a child in the United States. I will point out that according to studies from LendingTree and Northwestern Mutual, the average cost to raise a child to the age of 18 years old, so this does not include college tuition, is between $300,000 and $320,000 in the United States. So... yeah, it is incredibly expensive. Massachusetts and Hawaii happen to be the 2 most expensive in the country at more like $400,000+ to get a kid to age 18. So, I'm not trying to diminish the cost that it takes to do all of this. But frankly, the story just read as, a bunch of what I consider to be kids, 25-year-olds saying, I think I'd rather party and play golf than have a child right now. That might change when you're 30. We'll have to wait and see. It is exorbitantly expensive to have kids. I will also say that seemingly country after country, municipality after municipality have tried to change policy to incentivize more people to have kids, make it more economically affordable to do so, and almost none of them have had any real success. There's been like one, I think it was a city in Italy that completely reshaped their entire budget and their entire strategic plan to really focus on increasing the birth rate, and they had some degree of success there, but it was quite costly and required an entire, pretty much city focusing on one major thing, which is increasing the birth rate. So this is a genuine problem that I see, but I don't see any real way of fixing it unless we as a society are going to say, yeah, we're pouring a massive part of every year's U.S. budget into bringing down costs for families of young children, which I'd be pretty pissed about if, it happens, because I'll have already raised my children on the $400,000+ that it takes to get them to 18.
Look, Mike, there's no silver bullet, right? And many of the solutions involve subsidizing things, which only increases demand for them. It does nothing for the price side of the equation.
Having kids is sacrifice. There's part of that goes into it. Markets are mixed as we close out the show today. Dow up 67 points. S&P down 0.75%. NASDAQ off now 1.4%. We'll be right back at it tomorrow, folks. And it's a Fed meeting tomorrow, so stay tuned in. We'll be back.